TGIF, everybody. Hello, Sinatra, Kareem, Stephen, Brand, everybody. So it's a couple of hours till Moses comes down from the mountain to give us a word. Hi, Ryan. How are you?
Morning, Dale. Good, mate. How are you?
Pretty good. So Euro's threatening here. You know, I'm not doing anything until Moses tells us what the next commandment is. You know,
It feels like that, doesn't it?
The law that changes every month. So we'll see what happens. Gold under pressure needs to dig in its heels, or could abort. So this is a pullback. I think K-Man was looking for a pullback. You're not getting much in silver. So that's turning the ratio a little bit. Looks like, there's a possibility that the end tries something on hawkish to clean out stops here. Canada's still, the commodity currencies are still, where it's happening. I thought we'd have better buying opportunities. I don't know if that's going to happen, maybe back to 69.20 or so if the dollar rallies. And the dollar kind of looks like a triangle. It's either a triangle or a descending, or a wave four for one more shot up, or kind of a descending triangle with, flat line here and, your downtrend there. So we'll see if it breaks out from this, and this is a 4, that would imply that the next rally, next thrust could be terminal. So that's what I'm thinking might happen. Huh?
Yeah, it's difficult times like this. You can look at something and think, well, that's a good setup, and then in an hour's time it goes all out the window.
It's not easy.
You know, hey, good morning.
Hey, Blake, how are you, man?
Good morning, guys.
Like the point I was trying to stress on the flow show this morning is, to a certain extent, it doesn't matter what Powell says or anything. It's what the levels do. You've got that bottom level in the Dixie there. If he's dovish, but you can't break that level, there's your clue. There's your trading opportunity. That's all we can do now. We've talked it. We've talked the legs off it all this week.
Yeah, we've talked it to death.
Got to see, and coming Monday, you see what the levels are, and you see what the market wants to do. And if it starts breaking levels, then you know what to do. That's what.
There's no signal right here.
I was going to say, let me add to that a little bit, Ryan, and because you're right. I mean, the levels do matter. You're exactly right. But in a situation like this, especially with such a key event, like it's pretty, I hate the term, but it's true. It's pretty binary today, right? It's either you're going to see the dollar really extend its gains and break out of this quote unquote double top, and it's got a bull flag pattern, all that other stuff we can look at here in just a minute, or it's going to reverse and actually forge out a double top, and we're going to see a reversal. And a lot of people may not be expecting fireworks today, but I think in the FX market, we're going to get a good idea whether, I don't want to say the Fed pivots, but the market will still, start to look at it as being a potential pivot coming up, or we're not anywhere close. And that's going to, it will
pick the carcass to pieces.
It will, and the dollar should respond. And the best thing that we can do today as traders is find out what the best setups are for either outcome. Because look, if the dollar rallies, and this is what I'm going to do here in just a few minutes, once we kind of discuss, everything of what's happening, I'm going to look at, what dollar pairs, if the dollar really starts to take off and it starts to rally, what are going to be the best pairs to really start, taking advantage of that? And if the dollar does pull back, I've got my plan there too. And I want to be able to just, today is such an important day that I think it's important that you figure out, okay, dollar strength, what am I going to do? Dollar weakness, what am I going to do? And and then you just wait for those levels to be hit, right?
Do your homework. That's the most important part right now. Do your homework, know your levels, and know what you're going to do with them.
Have a plan either way. What like Blake is.
That's it. Yeah.
Yeah, you know, either way, you can't predict how a market's going to react, but you can react to the reaction.
Right. And that's
right,
one
buddy?
of the days. These are one of the sessions. I think you have to do that. You have to go, you know, unless you've got something running. Like, just give you guys an example. I'm short the dollar Mexican peso. I've been short most like the whole week, and I'm in nice profits. My stops are going to be put to break even today. Which, you know, is
why don't you grab the screen, bro?
Okay, I'll do that. And then, you know, from there, if I do lose my profits, which would suck, it's, you know, part of it. I mean, it's part of doing business, right? In the markets. But I don't think this is the day where you need to start going, okay, I'm going to go ahead and just take a long position in the euro and then just hope for the best. You know, like right now, I don't think that's the day, because what's that? It is gambling. That's exactly what it is today, because I think today's talk by Fed Chairman Powell could be as, you know, explosive and as random. I say random because, again, it's going to be picked apart. It's not, we all know that he's going to be hawkish. We all know that the Fed chairman's not going to veer off this path because they got caught wrong-footed, you know, last year. Think about last year at Jackson Hole and what he talked about, transitory.
Use that T word.
I mean, you know, he couldn't have been more wrong. So he is not going to make that mistake again today. We all know that. Everybody knows it. Everybody knows it. What they don't know is what little words he might say that they pick apart, like Ryan, you just said, that makes it go, well, maybe he is a little dovish. You know what I mean? And so that's where the randomness comes in. That's why we have to prepare for either situation. So I'm going to get into the charts here in a second, but I really wanted to hear comments from our team. You know, and we've heard from Ryan. Love to hear your thoughts, Dale,
Blake,
and Steve.
Blake,
if Steve's here.
Your microphone is misbehaving again.
Is it? How about this? Is it better now? Is this good? Is that good?
You're just moving your head away to drink
I am moving
coffee.
I am moving my head. Sorry. Thanks, Steve, for the heads up. I have no idea what's going on. But I
stop moving your head, bro.
Again, it just did it again.
Is this okay? No, I'm joking.
Yeah, you backed away.
I know. I look like I'm doing the walk like an Egyptian.
Maybe you got to go back to the headset, man. So you
I might have to. So hey, let's hear from you guys. Let's start off, Steve, since we haven't heard from you for a while. What are your thoughts going into today into Jackson Hole?
I think that if you objectively look at what we've had in the recent past, I have two observations to make. Observation number one, so far we are seeing a market that is looking to dissect any kind of statement and find dovish kernels in it, right? So we know that's what the market is chasing after, what they're hoping for and what they're looking for, right? Now, on the other hand, we've seen that Powell has been throwing to the market these type of dovish kernels on one hand, but reality is that for the time being, they've been acting for the Fed. I have to stress that out because the Fed is a very, as long as the other central banks for the past few years, very, dovish banks, right? They've been acting more to the hawkish side. So it's one thing what Powell is going to say and one thing what we're going to see them end up doing. So I do think that any dovish kernels are going to initially be welcomed by the markets, but I think at the end of the day, what's going to matter is if they hike 50 or 75, because that's going to show their future intentions.
So Steve, could dovish kernels be overruled by hawkish generals?
All right, Steve. Thank you for your thoughts.
It's the military metaphor.
And those are some great
Dad jokes.
great way to frame it. Stelios, what do you think?
I'm going to be a little bit different. I think, contrary to what some others say, the market's always looking to take the dovish part of Powell's statement, but I think we are getting close to the point potentially where the Fed is really going to do the shift. And if today's PCE data is weaker than expected and is showing a downturn, I will then wait for Powell. If Powell comes out dovish in any way, I mean, I'm not talking neutral, I'm talking dovish, I think this is it. I'm going to step in and I'm going to start taking the trades that I like silver again and platinum maybe and all that. I think the market is a bit complacent regarding how soon the Fed might switch their stance and might start showing us that, look, we're near the end. I know they shouldn't be doing this. Okay, I'm not saying this is right. But I think that they're closer to that point than we think. So I'm going to take any dovish statements. I mean, proper dovish, not this usual two-way Fed speak. Any kind of proper dovish statement. That's it. I think for me, it's the beginning of the end. So that's how I'm going to trade that.
Could they be doing this in front of the midterms, not to be, have a major effect on markets before the midterms? Still, that would give them. That would kind of be a motivation, wouldn't it, for them to go 50 instead of 75 and talk more moderately?
Yeah, and let the markets rally a little bit ahead of the midterms. Yeah, why not?
But here's the thing. I don't think the Fed is so political. I meant to say political Fed, but that and it came out as PED. I don't think they're as political as they were in the last administration. And I say that because, Jay Powell was nominated was put in by, President Trump. And some people seem to forget that, one of the reasons why we are where we're at is, and if you blame Jay Powell, just remember who put him there and who put a lot of pressure on him. I mean, they're supposed to be apolitical, but I mean, you guys saw all
year lower rates.
We weren't oblivious to how bad he was treated. Jay Powell
threatened to be fired
Trump every day on social media and the that's a lot of pressure. I don't care who you are. If you're a central banker and you're getting the president of the United States is putting that much pressure on you, you're going to bend at least a little bit, right? So, I think,
although Blake, their work, supposedly the job description is to be independent, right?
It is to be independent, but I think getting that type of pressure would influence anybody. Like I said, it doesn't matter if it was Trump or anybody else. It was just being that type of pressure is going to make them bend in a certain way. And the whole institution as a whole. So I think they were more political. I don't think now they're feeling as, they're feeling a lot of pressure because the economy is now, under pressure, but I don't think it's political so much, but that's just an opinion.
Well, it's not political if they're trying to be a non-event in front of a major election. That's not political.
Well, yeah, that's true. That's true. That's a good point. Hey, we haven't heard from K-Man, but I got to get into some of the technical. So let's hear from K-Man.
Oh,
really
your
quick.
head moved.
Your microphone faded again.
No, it's not the mic. It's his head.
No, I'm not.
No, it is the mic.
Is that better? I don't know.
Just keep going.
All right. Hey, K-Man, what are your thoughts here?
Hey, good morning, everybody. TGIF.
Good morning, afternoon.
Hey, good morning, good early morning, Dale. I am extremely well prepared to go into this symposium. So on the left side of my desk, I have an ADS deep sea diving suit ready in case Powell goes dovish. On the right-hand side of my desk, I have a spacesuit ready in case the dollar sucks us all into a black hole. And on the shore, I have my little paddle board ready in case everything stays quiet and I can gently paddle to the pub. Now, on a more serious note, I think he's going to walk the fine line again. He might give us everything and nothing at the same time. But my idea is that it's too early to change course. That is still my base case. So I'm thinking that I'm ready to sell a dovish tilt if the market just clings on to one word. If it's not outright dovish, I might buy a few dollars against some currencies. Preferably still possibly euro, because I think the euro still has a lot of weight around its neck. But today we trade dollars, and then over the weekend we have to be mindful that the symposium goes on, and we will hear from Schnabel, Villeroy, possibly Kuroda as well, Bailey, and on Monday we may open a few gaps in the other currency. So be mindful of that on the other side of the dollar pair. But for today, I think we trade dollars.
All right. Well, thank you very much, K-Man. I appreciate your thoughts there, and I think that's all it. And that's I'm gonna go deep diving or jump in a spacesuit with you. So let's talk about a couple of the big setups that I see really quick. First of all, the S&P. You guys know, be ahead of like big events. I always like to say that we get, kind of mid-range in the market. And I do see that we are mid-range right now. If you take a look at the S&P, we're stuck between the 200-day moving average, which was near 4,300, and the support here, which is around 4,100. You can see the pivot that we made, which is a 38% retracement. We stopped at 4,200 overnight. And if you're, a ForexAnalytix, user and listener, you knew that the S&P was going to find us at 4,200 overnight as resistance. That we did. We actually went to 4,199. So you can see that we are now stuck right in the middle of this, what I would consider a range. So going to the upper or lower end of this range is entirely possible today. Okay, it is possible today, because whatever Powell says, if the market sees it as hawkish, then the S&P is going to be trading down towards 4,100 again. And if they view them as a little bit more dovish, we could be trading up at 4,300 or that 200-day moving average once again, which is really key. And just if you guys is just staying with the S&P, if you remember the week ahead video, so this last Sunday, I mapped it out that I said, hey, we're ahead of the Jackson Hole Symposium, we're probably going to see this sell off. Everybody's selling into the market here. But we're going to get a little bit of a bounce. And if he does come out dovish, which we are getting, if he does come out dovish, there's a lot of unfinished business above the 200-day moving average, which is a 618 retracement of this entire move here, right? And it's also 127% extension of that last leg lower. That all comes in right here at 4370, 4380. So everything's coming exactly into plan that we talked about on the week ahead video. So just keep that in mind. But what happens from here is solely up to what happens today after the speech. If we get some dollar strength today, I think you have to be looking at the sterling and the euro as being shorts.
You're doing it again, Blake.
So, I don't know what is going on. I'm gonna have to. Sorry, I don't know what's happening
You're
here.
good now.
Okay. The cable, as far as I'm concerned, if the dollar continues to strengthen, I think the cable and the euro both are good shorts. You got the sterling, you got the euro that's trading extremely heavy. Yeah, we got a little bit of a false breakdown, but we can't get really solidly back above this descending trend line. So if we do have dollar strength, what's up with the French power prices overnight? Did you guys see that?
Rating at 1,000.
Yeah, I mean, how is that going to affect not only obviously the French, but all of you guys in the Eurozone? You know, what's going to happen in the UK? I think
Yeah, Ryan, are your utility bills, did they go up like fourfold this year? 4 or 5-fold?
The price cap got announced. It went up to £3,549. So I'm waiting for my kindly energy company to drop me the email telling me how much my bills are going to go up.
So what was it
Lucky
last
you.
year?
Yeah, at the moment I'm paying, because what they do is they take an amount out to cover your bills, and you can build it up when it's quiet or you're using less. So at the moment I'm paying about 300 quid. I'm expecting that to probably go up to nearer probably 500.
Wow.
Jesus.
Wow. That's a big jump. Well, okay. So since you do live in the UK, and I'm assuming it's not just going to be a Ryan problem, it's going to be the entire UK, and then also, you know, the Eurozone as well. If we do get dollar strength today, and the Fed chairman is hawkish, and he does, and it sounds like we might actually get back-to-back, you know, 75 basis point hikes, you know, September and ahead. Why can't the sterling trade down towards channel 15?
We're losing you
We're
again.
losing you. We're losing you again. You missed that last couple of comments.
Yeah.
My God, I don't even know what is up with this microphone. But I was just saying, why can't the sterling trade down towards 115, and why can't the euro trade, you know, to new trend lows if he is hawkish, right? But I'm going to point this out, though. If he's at all dovish, if the market sees him at all dovish today, look at this inverted head and shoulder pattern in the Aussie. Think about this. I mean, the Aussie dollar has held up like very well. Look at some of these currencies that the Aussie's trading against right now. Look at let me pull up the pound Aussie. Look at this breakdown in the pound Aussie. That's a massive breakdown.
We're losing you again.
Look at the Euro Aussie. That is a massive breakdown as well, right? You're seeing the Aussie really strengthen against, you know, the European currencies. Look at the Aussie yen. It's the only yen pair that is broken higher out of its consolidation. Well, it's trying to anyway. So you've got the Aussie that looks really, really, really strong. So if we do see dollar weakness, why not prey on the currency that is already strong? You know,
you're right.
Why not play into the hand of the stronger currency if you get dollar weakness? Then you've got the Kiwi that also looks very similar. These are all inverted head and shoulder patterns that are setting up.
Or Canada on the short side, right, Blake?
Yeah,
same deal.
Yeah. Same deal with the Canadian. Think about, look at the dollar Mexican peso. We have a massive base, and if stocks rally, this should break down through those lows. So I think it's pretty clear that if we do get dollar strength, you have to play it into the European currencies. You know, that means short euro, short sterling, right? You got to play that into dollar strength. And dollar weakness, Aussie, Kiwi, you know, Canadian, like Dale just pointed out, peso, that too. Then you have, and just for some clarity, and usually we do this with just the ForexAnalytix community, but today is such an important day that I think we have to do it with everybody. This is that big double top you're talking about, but this is also a big bull flag pattern. So if we do get dollar bullishness, we are breaking out, and it's going to look ugly for everything: stocks, gold, silver, you name it. But if he's dovish at all, we've got this big double top, and we're going to roll right back over. And that's going to be good for risk assets. All right. And so I just wanted to say that somebody asked earlier, do we have data today? Yeah, we have PCE data, right?
Yeah, very important.
Yep. All right. So hey, I'm gonna stop there, and I want to hear any other thoughts as we go into? We got about 5 minutes before the PCE data, and then Dale's got Gareth Soloway that's coming here. I'm sure he's going to talk a little bit about Bitcoin because it looks like crap. What are you guys' thoughts? Anything to expand on what I said, or to argue what I said?
I'm impressed how silver's holding up today with gold down 10 or more.
Well, that's just because Stelios is here. As soon as he gets off the
No, I mean, I haven't seen this in a while. That it's been the other way for a while. So
China is talking about putting stimulus in place and some infrastructure plans, and then there's the lingering possibility that Biden might also still be on his structure plan. So I reckon that's where silver holding better than gold today. And on the dollar side, Blake, I completely agree on which are the different instruments, and just would like to add on this euro thing that I'm waiting for the weekend to be over, probably because I want to hear from Schnabel and Villeroy. But I'm with you on the euro process. I'm still short EuroMex.
Wait, are they speaking this weekend?
Yeah, they're
yes, right here.
Panelists.
Right there. That's going to be Saturday at 10:25 a.m.
Yeah, but then we should already know what they are going to say, because Schnabel is a hawk. She's German. She's a hawk, and Villeroy is just one of Lagarde's doggies, right? So he's probably going to err on the cautious side. So I wouldn't think that there is much going to come out, but as we say never, right? Yeah, I'm with you. I covered most of my Euro Aussie and Euro Canada, well, all of it, Euro Aussie and Euro Canada today, but I'm quite ready to add them on again if we don't get anything world shocking out of those.
So we're gonna hear from Jordan, and this is the Jackson Hole. I was going to say menu. It's not a menu. It's a calendar of events. But we're going to hear Jordan actually on Saturday. It's going to be interesting to hear him because, I mean, the Swiss National Bank has had negative rates for what, the last 10 years? Right?
Yeah, pretty much.
Yeah. So it's going to be really interesting to hear what he has to say as we come out.
That agenda is missing a ton of speakers. We got Governor Orr from the RBNZ. He moved the Kiwi last night by saying he sees the end of aggressive rate hiking, maybe a couple more hikes to go. We've got Bailey, don't know when he's appearing. Got Kuroda, don't know when he's appearing. So that
but aren't they popping in mostly just they're popping in with reporters and things like that?
Maybe that's what they're doing, but
yeah,
they've got a few general discussions scheduled, so whether they pop up there, but it's going to be over the weekend, so at least we'll get to digest any comments before markets open, and we'll know
how much money is on Kuroda being drunk off his ass this weekend.
No, that's 100%. That's not even a bet. That's not worth a bet. You want to
like the difference between a 30-year-old guy and a 50-year-old guy now that you're 50 when they go into a bar?
What's that?
The 50-year-old guy asks for the menu first instead of a drink.
This is a true statement. All right, hey, we got 2 minutes, less than 2 minutes before the data comes out. Actually, about 1 minute. Any last minute thoughts here, guys?
Yeah, you make sure your equity's here Monday. The market will be here.
Great piece of advice, Dale. So I'm going to pull up the dollar index. I'm actually going to pull up the dollar index, the S&P, and since this is the PCE data, I'm going to put up and gold. I think gold we should be watching. By the way, the levels that I'm watching, 1730 and 1765. If you don't know why, it's because we rejected 1765 yesterday. 1730 is a 618 retracement. Here's the S&P right here. Oh, shoot, the dollar index. Excuse me 1 second. Okay, there it is. There's the dollar index right here, S&P, gold right here. So, and then here's the PCE. You guys scream out if you see any data that's jumping out at you, please.
Oh,
And
because
this,
Indian industrial production. I'm kidding. Sorry.
the data flash is included with your ForexAnalytix subscription. It's really nice to see the data pop up
5
as
seconds.
it's released.
It's as
5
fast
seconds,
as
3,
Bloomberg.
It is.
2, 1.
Except for today.
Personal
We are
income
seeing
is
the dollar
down.
rally a little bit here.
Personal
it's
income is
fading.
down, but it's not really that important.
Goods trade balance came in a little weaker than actually that's better than expected. It's a smaller number,
Oh,
but
4.6. So
Down,
that's
down
weak.
about.
It's down.
oh wow,
This
look at
is
the
going to give
PC.
Powell something to think
Yeah.
about.
Yeah, that's why the euro's probably flying. Is it flying?
The euro is pushing higher. We've got, and I'm surprised
Yeah.
gold hasn't pushed up higher as well. But look at the S&P. The S&P likes that data. You know, the data is weak. That gives Powell something to pause about, right? Pause about. Get it. Oh, that was funny. You know what we are seeing is we're seeing the dollar under a little bit of pressure, but you are seeing risk assets actually catch a bid here. And you got the S&P that's moving higher. Even look at Bitcoin. Bitcoin was around really important support. I know I just tweeted about it just a little bit ago, but Bitcoin is holding, you know, really key support here. It held above this flag support. So you can see that flag is still developing. But yeah, we held it. So all we need is just a little, just a sliver of dovishness from Chairman Powell. And if we get it, risk assets might bounce a little bit more and catch everybody off guard, because as we've been saying the last few days, there has not been a bigger short position. Only 3 other times in the last 25 years in the markets. The market is positioned short, and the market's pretty effective at screwing as many people as possible.
Well, then the euro bottoms in, because there haven't been this many shorts in the euro since, I believe, Feb 2018 or 2020.
Yeah, so think about the squeezes that could happen before we continue lower in the euro or in stocks, right? Just some food for thought, guys. Anyway, hey, TGIF, everyone. If you're a ForexAnalytix subscriber, I'll see you in about 45 minutes for the morning edge with Steve and Stelios and myself. We'll cover all of our major assets that we do every single day with the ForexAnalytix subscribers. Also, if you are not in the trader funding program, you want to learn how to access our money, trade our money and not your own money, come check it out. The trader funding program. We had a bunch of people go into live larger accounts this week, so it's always a good thing. Steve, Stelios, Dale, Ryan, K-Man, you guys all have a great weekend, and thank you so much.
You too.
Thank you, mate.
Thanks, everybody.
Hey, team, thanks for laying it all out on the court again for our community. Great week, a lot of great stuff.
And to answer, Mark is asking, is the trader funding program available for people in Kenya? Yes, it is. Yeah, as long as you're outside the list. Is it called OFAC, OFAC, or something like that, of approved countries? I think Kenya is not in that list. I have to check, but I think it's not.
OFAC.
Yeah, you can always write to us, and we have a support page.
Yeah,
that's right. You can talk to support right through here and ask that question, and one of our representatives will follow up with you and see if Kenya is in that list or not.
All right, guys. Thank you, team, dream team.
Thanks,
Gareth,
everybody.
Hey, Gareth, welcome back to F.A.C.E, buddy. How are you?
Hey, I'm doing well. How are you doing?
Good. So I know that Blake said that you're really focused on Bitcoin. You want to share the screen and tell us what's
by the
on
way,
your radar?
before I leave, I just want to say hi to Gareth. Hey, Gareth, how's it going, buddy?
Hey, buddy. Good to hear your voice, buddy.
Yeah, same here. And TGIFT, and thanks for joining the F.A.C.E show with Dale. It's always nice to have you here in the community. All right.
Oh, sure.
Have a great one, guys.
All right, Gareth. So Apple, I just want to acknowledge last time I talked to you, you're right about the top in crude. You said crude would come down. There hasn't been a midterm election where energy prices haven't declined into it if they needed to. So
Yeah.
kudos on that crude call.
Thank you. Thank you. So yeah, so I just had the Apple chart up. Just, one thing you guys were just talking about is, what was the market going to do? Were we going to get a little bit of a relief rally continuation? And one of the things I was just noticing on Apple, and we know Apple is kind of the leader of the tech world.
They say it's 7% of the market.
Yeah.
Is
yeah.
that
So
correct?
it makes sense where Apple goes, often the market will follow. But what you can see here is there's a gap fill just up a little bit more, around 171.45 to 50. So it does kind of make sense that this data we just got could be a little bit more positive. We still see the S&P down, but not by as much. And then if we get that little bit of dovishness from the Fed today, I could see Apple surging up towards that level to fill. Now it's not that far; it's only about $1.50 higher. But we know gaps are meant to be filled in general. And bring up Bitcoin,
even if it's years later.
Yeah, that's right. That's right.
So,
I think the stat is something.
This is immediate right there. So nice look. I like that.
Yeah, and I think one of the things to remember is that in general, gaps, when price gets closer to gaps, it works like a magnet to almost suck it towards it and pull it towards it. So as close as we are in Apple, it would be a little unusual not to see it fill within the next few trading days. But yeah, interesting today with
how
the
would
Jackson
you approach
Hole.
it with puts?
Yeah, so I think once basically what I'm going to look to do is look to short it or buy some puts once we get up into that level, because I ultimately am bearish on the market. I think that, the market's in this weird phase of saying, can the Fed engineer this soft landing without, collapsing the economy into recession? And I think later this year, we get into a point where the market starts to realize that we are going to go into a recession, whether it's late this year or 2023. And the question then that's going to freak out the market is, how does the Fed save us? Like if inflation is still 4 or 5%, they can't really come out gangbusters and print our way out of it. So do we get into this kind of stagflationist type scenario? And I think that's really the scary scenario for the overall equity markets.
Okay. And just one more before you get to Bitcoin. Last time I talked to you, you were constructive on gold. And, I was with you, and gold took out that 1780 level before it broke to 1680. Do you like it here? Would you buy breaks in gold?
Yeah, I still like it. As long as you're kind of holding this lower support around 1680, I think that's a really important level for it to hold. You can see it came right down there. It did sell off more than I thought it would, to be honest. But I think that, you look at the dollar and the vertical move we've seen in the dollar, and it kind of explains that away. And then you had this beautiful move up where if you connect these highs on gold, we did break above it. We did come back and retest it. And that
was 61.8 back of the rally there.
That's right.
Gareth.
Okay. That's right.
All right, buddy. Just wanted to know if I only know if I'm right if we agree.
Nice.
Go ahead, buddy. So you want to talk Bitcoin? It's been kind of holding this little. God, it's such an ugly formation.
It is. It is. To me, so basically when I'm looking at this chart, I'm seeing a macro bearish pattern, right? So we have this down move with this bearish pattern, which looks like it's starting to break here. We then have another micro bearish pattern, which is this big red bar with these little inside bar ones. The only positive to it is you could almost make out a mini micro. And this is getting into really kind of like short time frame stuff. But you have these two green up candles, and then these are all really flat inside of those two up. So what that could tell us is we have a very short, small move up, maybe back to this line, before the micro and the macro bears start to take hold and we go back down and start to collapse. So it would almost, I feel like this is almost too easy, where most investors are looking at this and saying, oh, that's an obvious bear flag. And usually it's got to flip those people out by popping up just a little bit. Right. It's almost too obvious.
You remember Joe Granville?
Yeah.
Were you old enough? That was one of his expressions. What is most obvious is obviously wrong.
Yes, that's a great one. That is a great one. So and the other thing on Bitcoin is, talk about just dead. It's really remarkable to see the Bitcoin chart over the last 7 days, but even over the last, since June. Considering the equity markets have been more volatile than Bitcoin for the most part, which is very unusual. I don't know if there's been a point in history where for months you've had, a bigger bounce in the NASDAQ, for instance, than in Bitcoin. And I think that tells us a couple things, right? It tells us, number one, that people are a little kind of iffy on crypto because of Celsius, because of Terra Luna. All these things have made
Where do you
people
trade
shy
it if
away.
you can't trust having your account open at one of these,
Right?
whatever they're called?
Yeah,
They're not
one of these,
FCMs or I don't know what they're called.
Yeah, you're
Coins.
100% right. And then the other side of the coin too is I think we're getting closer and closer to that regulatory clarity, right? And so no one kind of, the big money at least was kind of like, listen, we're not going to take a position until we get a little bit more clarity, since we know it's coming sooner than later. We hear from Gary Gensler. He's been talking more and more about Bitcoin being a commodity, but everything else kind of a security. So what does that mean for an Ethereum? What does that mean for the whole space? So I think those kind of are keeping money on the sidelines. My hope is that, and again, I'm a long-term Bitcoin bull, that once we get that clarity, the market, and you know this, Dale, is like the market hates uncertainty, and that goes for crypto, that goes for stocks, every asset. So even if the regulation that comes in maybe isn't viewed as amazingly good, it might be the clarity that helps now bigger money say, okay, at least we know the rules. Now we can decide to allocate capital to cryptocurrencies. So
when do you, what price level do you back up the wheelbarrow to buy Bitcoin and Ethereum?
So for me on Bitcoin, I have it priced to go down to about 12 to 13,000. I feel like a lot of people are saying that level now, which makes me nervous that it could go even lower. But basically, I'm a dollar cost average person. So when I start to look at a long-term investment, I'm not the type to just go all in at one level. I like to kind of divide that amount of money that I'm going to invest into 6 parts or 5 parts, and I just kind of space it out. So for Bitcoin, 19,000, I even started to nibble a little bit, and then I'll probably do 16, 13, 10, 7, kind of, just little bits and pieces along the way, where as long as that long-term thesis of Bitcoin holds true, I'm okay being out of the money in the near term.
Okay, Ethereum seems to be showing much more relative strength in Bitcoin. Would that also be, way above its lows, almost like a different market? So it maybe you go with the strength, right? I mean, maybe you buy Ethereum because it's holding up better, and on a pair trade, long Ethereum, short Bitcoin's been working for a while.
Yeah, it has. The only thing investors would want to be careful of is the merge, right? So how much of the upside that we've seen has been a kind of buy the rumor of the coming merge, and then do we see that kind of, okay, the merge is gone, happened. It changes how Ethereum is and everything, but does it really change the psychology of investors? And that's where I would argue that it may not. We know that I think what they're doing is going to be long-term bullish for Ethereum, but in the short term, everything is ruled by fear and greed, right? So right now, fear. And so I do worry that once that happens, you'll see people saying, okay, it's over, let's exit and kind of dump it out. And I wonder if it does come back down. So for me, at least Bitcoin, Ethereum, I have a target of around 600 and change. So it gets down there, I definitely start accumulating. I know that seems like a long way from here, but again, if you're like me and you look
call
at
me and remind me, okay?
Yeah, for sure. So if we look at the NASDAQ, right, and here's the QQQ, you can't tell me that the bear market's over yet. I mean, I'm just not buying it. Considering the Fed has really put on the stoppers in terms of printing of money and pulling out liquidity and raising interest rates. And so I got to believe the NASDAQ is going to make lower lows even over the next 6 months. And if that happens, I don't understand how Ethereum would still hold above those recent lows. Same thing with Bitcoin. It's got to go below 17.5 because again, we just know that it's a risk asset, and it's going to, if the NASDAQ is going to drop down here, which is kind of my target, then I got to believe that those cryptos will make new lows. Anything
in the FX arena capturing your attention?
I would just say in regards to the dollar, a lot of people are calling for a big break on the DXY. I have kind of a resistance potential double top up here until proven otherwise. I'm going to go with that. And again, I just kind of go with what I see. And what you can see here is on the longer term chart. Let me get rid of my 200. Is you have this pivot right from here, which goes back to 2001. And then there's a secondary trend line here as well. I believe this is the line here. Where we're kind of right into that point too. So that's a big resistance point for the dollar, and you still have a double top. So I'm in the camp where, it may be kind of a little bit of a fake out push up here. And then we could see that leg down, which really should be in the near term slightly positive for equities, at least, you'd
Right.
think.
Right. Okay. And oil. We're starting to grind down here. You still have lower targets.
I do. We did hit kind of my first target of this pivot point, which was around $85. I still am in the camp where I think it likely will head down to about 76, 77 going into the midterms. Now, we're not that far away at this point, but I still think that that's a decent chance. But yeah, I mean, it's been an amazing move down. And again, the one thing I'll show people, and let me just get rid of some of these lines so we can really see the beauty of the charts, is just always remember that parallels are so powerful in trading. And this is my favorite parallel. You take the low from 2009, this kind of kisses right here in 2016, and you pierced in COVID. But if you take the body low and then look at how you connect, and it's a perfect parallel line to the Russia invasion high of 130. And then, I mean, again, just reversing. And by the way, with parallels, the beautiful thing about it is usually the highs will note extreme greed. So when we were at 130, I mean, you even had big banks like Goldman and other players saying 200 or higher. And the public was just so bullish. And for me, that's always a trigger where I start to think the opposite. And then when you have a chart that confirms that, it makes it a much easier trade to kind of pull the trigger on, for me at least. And that's where you get your kind of your discipline and your emotional control in line, where you start to kind of say, okay, when everyone else is saying something, let me be cautious, and then let me look at the charts. Do the charts confirm my cautious nature? And if you get that, then it's usually a really powerful signal.
Yeah, that's a great look, Gareth. Do you watch agricultural commodities at all? I think wheat is a sleeper down here. I know they've been able to get some wheat out of Ukraine, but you have that nuclear reactor there, and I don't know what weather is like here. The $7 area looks pretty impressive. If you go to, like, even something shorter term, it's grinding something out here. I mean, really, what's changed between $12 wheat and 720 wheat as far as supply? You know what I mean?
Totally. And in fact, I mean, there's just so much support here. This is a really good level. I mean, you could go back to 2021.
You weren't looking at it before, were you?
No, actually, I wasn't.
Bet you do now.
Looked at this chart.
Okay.
You're absolutely right. I do. Yeah.
Anyway, it looks like a sleeper to me, and there's still a lot that could go wrong, and we do have water issues everywhere. It's either we're baking or we're flooding, and those aren't ideal conditions for growing. There's still problems with getting fertilizer. I don't know if you probably did some fib work from those lows you have all the way back there to here.
So I'm just looking at this now.
There's some value. It's more of a value buy than anything technical, at least yet. But I do see some divergences in the last.
Yeah, and technically it actually looks pretty good. I mean, you got an upsloping one going back from 2020, connecting through the 2021 low that kind of we just pierced and bounced. And then you have this flat one, and you're almost at this level here as well. So there's a lot of support around here as well. But yeah, it's actually, considering that I'm a believer that inflation is not going back to 2 or sub 2%.
Yeah,
I mean, it makes sense that this is going to have another run up, at least a partial run. I don't, who knows if it goes back to the recent highs, but even a move from 700 here to 1,000 would be awesome.
Yeah. So anything else on your radar? You're so quick and efficient with your looks.
Oh man, let me think here.
We have time if there's anything you want to leave us with.
Yeah, I think for the most part, I'm a believer that, again, if you look at the S&P 500, that we hit the 200 moving average, we kind of kissed it, we've pulled back.
Isn't that a little too pat, Gareth? That
it is.
The rally ends where everyone thought it would end. Wouldn't you be more bearish if we, I don't know, say pulled back to 400, 40, 50, and then broke through the moving average, got everyone bullish? Because I mean, a lot of people aren't bullish now.
No, you're right. You're right. In fact, from what I'm hearing is most hedge funds are heavily short, which also kind of shapes my view that you got to have some sort of push up here first.
Wouldn't
and again,
that
we may see that.
Breaking that trend line and, the 200-day, and then the bears will have less a reason to rationalize their position and might force people to start getting long again. Oh, there you go.
Yeah, I mean, you could
4,500.
see, I mean, there's definitely some levels where if we did break through, you could stop on a dime, you know, up here
Yeah.
where you know that everyone would be bullish at that point if we got up to
Yeah.
445 or so, taking
That's
out,
what
you know,
I favor.
yeah, and the media, we know the media would harp on the 200's been
Oh,
broken
yeah.
above. I mean, it
200,
would just start
200.
to shift that narrative,
I knew
which
you'd
would
like
do
that.
it. Yeah.
Yeah, because you think, you know, we think alike. You know, when things are too pat, I'm a little skeptical.
Yeah, me too, buddy. Me too. That's exactly how I think too.
So Gareth, hope things are going well. I know you have a great team at ITMS, and your interviews, you have a great following. You're getting a lot of views, and you get a lot of views. It's because you're right a lot, not always,
Thank you.
but a lot. And best way for people to get a hold of you, would you rather have them go to at Gareth Soloway or at ITMS? Your call.
Yeah, I think at Gareth Soloway, my Twitter is the best place. It's lots of good tweets out there that kind of give market commentary, make you think a little bit differently, and then from there you can always branch out, see what I do, see how I think, and if it's interesting, you can find me at inthemoneystocks.com or Verified Investing Crypto.
Okay. My trading warrior brother, Gareth Soloway, thanks so much for giving us some great looks again today, like usual.
Thank you so much, Dale. Always a pleasure.
All right, buddy. So everyone, that's it. That's a wrap. Everyone have a great weekend. Good luck with, oh, Gareth, you still there?
Yep, I'm here.
All right. You know, the inflation number came in a little softer. So is Moses going to talk a little bit more like a dove when he comes down from the mountain today?
That's my guess is it's going to be a little less scary than the market thinks, although it's still going to be, he's going to have to keep that hawkish tone because he can't let up until we really see inflation down. He can't be looked at like he's kind of giving in, but I do think the undertones of a couple words might give the market a little bit of hope.
Okay, so Gareth thinking that Moses is going to cut some slack to the tribe. All right, so thank you, buddy. Have a great weekend. Talk to you again later, man. All right, everyone, have a great weekend. Good luck with the Fed. If you like what we're doing here and we're helping you, best way to say thank you is to join our community. And I'll tell you something, you're not doing that just for us. It's going to help you. So you're doing it for yourself. And if you really think you have what it takes, give the trader funding program a shot. And God willing, I'll see everyone on Monday. Thank you, Richard, Mark, all you guys, all my trading warrior brothers and sisters. Thank you very much for supporting us. Adios. Oh, yeah. And don't forget, Laura, don't just count your pips, count your blessings. Almost forgot. See, I get carried away with money too. I'll see you guys. Thank you, Sinatra.